Hello, everyone. I got some emails in that some folks are trying to break away and log on. I'll give them just a couple of minutes, and then we are going to go ahead and record this. We have a lot of content that we have recorded in the past, and we do record our webinars. So we'll get started in maybe 30 seconds or so. There's a couple of folks that are coming in, and then we're going to really enjoy sharing with you what what we have. This is only for lenders. This is only a webinar for lenders to understand sort of what we've uncovered in our research in working over the last 3 months full time on this situation. So thanks for taking the time away from your busy schedules. I know you'd love to just be answering borrower phone calls right now, but this will give you a nice safe haven. We do feel your pain in that regard. So a couple other folks just jumped on, so that's great. So I think we'll start with an introduction. My name is Christopher Riley. I got into the PPP loan world through some folks in Arizona, actually, that had a YPO network, and they all were trying to figure this situation out. And so we quickly realized that there were a lot of gaps, and I think everyone now realizes it. And so I brought together a team of people that some are web developers and some are workflow process experts. I myself have a master's in organizational psychology. I'm a forensic auditor, M&A licensed. We do a lot of due diligence. But then we needed to understand the borrower scenario. And that's what I think you're going to get out of this webinar today. What is the borrower going to go through? You, the lender, may have the answer. We may have the answer. The tech software people may have the answer. But if the borrower is perceiving something is wrong, or they don't have the answer, or they don't understand it, that's reality. The perception is reality at that point, and they're going to call you, and they're going to email you. They probably already are doing that. We've got a way to get around that for the most part. And I think some folks are doing a great job of getting their portals going and up and running, but they've missed something. They've missed the user experience because the user has never gone through something quite like this before. This is the second half of a football game where you don't exactly know what the rules are. They're not the same as the first half of the football game. So I'm going to introduce Adam Grounds, who is on that software developer aspect. He's got tech experience, highly educated in a lot of different regards, but mainly how the workflow of a process works. So I don't want to take up too much of your day, but it is really important, especially for those that might not be able to make this, that they see this recording and what options are available to really knock off the major issues. Because we now are working with dozens and dozens of customers that have these PPP loans, a lot of them over $2 million. We know they're going to be audited, and we're right in the middle of trying to find that perfect workflow of getting the application to the lender, and then the lender reviewing it and getting it to the SBA, and then cycling back for the audit process. So Adam, go ahead and take it from here, and I will be monitoring. There is a Q&A option that you can put questions in, and just throw a question in, and I will see it, and I'll either stop Adam or we will go ahead and address it most definitely. So any questions that you have, I'm monitoring those, and then I've got my team on alert that's kind of looking through. So Adam, go ahead and get started, and then we're going to take some questions about halfway through.
Perfect. Yeah, thanks everyone for being here. And before we really jump in, I just want to say that the big reason that we're doing this is because we want to help the borrowers really in the process. It's great that we can also help the lenders, but you know, there's millions of small business owners all around the country right now. They're trying to navigate how to keep their business afloat during the pandemic, as many of them are being shut down and rules are shifting. And the last thing they want to have to worry about is applying for forgiveness on their loan and the complex calculations that can come along with that. So we really started doing this for people like that, and we went down this road. And really, the more lenders we can help prepare a good pathway for their borrowers, the more we have accomplished what we wanted to accomplish. So hopefully, at a minimum, you'll take away some just questions to ask yourself about how to set up your own process at your own bank. But we'd be excited to work with any of you. But we hope that either way, this spurs some questions on your end that'll improve your process. So what are the problems that we see? There's two basic problems that we see out there. And these don't sound like problems, but we'll get into that. So how should a borrower fill out and submit their application? That's problem one. Problem two is how should a lender process all these applications? We're going to start with the actual filing of the application. So what actually is the problem? I want to start with what is the goal that we want to accomplish with an application process. Ideally, with this whole process, we want to have happy borrowers at the end of it. That's really important, especially for smaller lenders. Having a good reputation in the small business community that you're operating in is really important, and a big part of that is having good customer service, having good relationships with your clients, with your borrowers. And so we want to make sure that your borrowers are happy as a result of your process, especially as other banks out there have bad processes. You'll stand out as having a good process. You also want to make sure that you're not using up a lot of the loan funds. You receive processing fees. You hopefully are going to make a profit on each of these loans. But for some of the smaller loans, you might not if you use the wrong process. It's going to eat up so many man hours that you'll eat away at the profit you otherwise would have made from those processing fees. And then another goal of a good application process is receiving standardized applications. That'll yield a lot of beneficial results downstream, and we'll review that. But these are the three kind of core elements that I think are a part of a good application process. The solution that we've seen out there, some of the clients that we're working with, we have a lot of clients that are borrowers that just wanted help understanding how to use or how to track their expenses across this period or how to file for their applications 8 weeks ago. We are in touch with a lot of their banks. And so we've seen that there are a couple of banks out there that have started at least communicating with their clients. And overall, what they've been doing is an email that says, we don't have a portal yet, but we'll have one soon. They talk it up, they say how great it's going to be, but it doesn't exist yet. No one's really accepting applications, so that's okay. But they sent an email saying that there will be a portal soon. That's good. The next thing they include is some information about the application itself. They'll send along a copy of the 3508 EZ form, the standard 3508 form, the instructions that go with each of those, and then some extra guidance, oftentimes just something they wrote up in an email that they'll send along. This seems good. Oftentimes it can actually lead to some confusion. For those that are familiar with it, you have these two different applications. Each of these applications has 4 to 6 pages of instructions that come with it. And to really make full use of those instructions, you almost need to read the interim final rules that the Treasury Department and the SBA have published. And there's hundreds of pages out there on the Treasury website that you could review in order to better understand all the language in the applications. But your borrowers aren't going to have the time to review all that. So they're seeing some instructions that you're providing them, but oftentimes they're contradictory. It can raise questions and almost just raises more questions than it would have to begin with. And then once the portal's ready to go, they'll open it up and just kind of hope that the borrowers can manage the portal properly. This is the standard process we see a lot of banks starting on. It doesn't matter what the portal is. This is kind of the starting point we've seen from a lot of people. Now, what does that actually lead to? What does this process, this path that we see a lot of banks going down lead to in terms of what the borrower feels? From having worked with borrowers for the last couple of months on PPP loans and tracking of all these expenses, we know that they feel like there's a lot of complexity here. Even the simple things they feel like are kind of complex. There's a lot of rules, there's a lot of calculations you have to do, there's a lot of certifications, there's a lot of gray areas that they feel are complicated. This all leads to them feeling a bit confused. Sometimes there's conflicting guidance and instructions or unclear statements that they have to interpret. You don't want them feeling frustrated, lost, or confused, because all that leads to them being somewhat fearful. All of this, on top of it all, there's statements that have been published about audits that are going to be coming, and they have to certify certain things that they know that what they're publishing is accurate, and they've done it all in good faith, and the information's right, and they've provided everything, and There's a severe punishment if you certify something and it's inaccurate. And so there's this element of fear out there, and all these business owners are just trying to keep their businesses alive in the middle of the pandemic. What are they doing? If this process is frustrating for them, they end up not only frustrated, but also afraid to submit this application. All of this leads to questions to you. So what this means is, and this is this graph we put together just illustrates some of the points here. Based on loan size, you're going to have a different amount of effort you have to put in. Obviously, this is a generalization, but we'll just work through this. So the idea is, as loan size increases, this kind of tracks the amount of effort you might have to put in. So for some of the smaller loans, these small companies, maybe it's an independent contractor, sole proprietor, husband-wife team that has one employee. They're too small to have support. A lot of these people, they don't have a lawyer to call. They don't have, a CPA that's so readily available outside of their normal tax filings to hop on and answer questions for them. These also happen to be the people that they ask a lot of questions. They want to know how to do certain things, how to track certain things, what information they need to provide. They want to do a good job with this. They want to do it the right way. They're afraid to do it the wrong way, but their heart's in the right place. They want to do a good job and submit the right application. But that leads to a lot of questions to you. They call you every other day with some questions. I think we all know people that are like this, businesses that are like this. Overall, for these people, you're getting a pretty small processing fee, but they take up a high proportion of the number of questions that you receive. So this is one scenario that can be tricky to deal with. The next scenario is the big loans. So these companies might be anywhere above that kind of 2 million threshold. These companies are big enough that if they have questions, they have their own, on-staff accountant. They have a CFO maybe. They also have lawyers. They'll call their lawyer if they have a question or need some backup on certain statements, some legal advice on any of these things. They have the support in place, and they can afford to hire someone that'll help them with all of these things. So they're not going to have a lot of questions for you. That's good. That alleviates a lot of stress for you. But when they submit their applications, there's going to be a lot of documentation for you to have to sift through because they're a bigger organization. There's also likely to be more auditing. We don't know exactly what the audit that's going to happen for anyone over 2 million in loan size is going to look like, but we know that it will exist. And so for any of these larger loan sizes, what you kind of gain in not having a lot of questions up front when they have to fill out all the information on these loans, you kind of lose on the back end when you have to walk them through an audit process and gather more information from them. There's a lot of back and forth there. Then you have this middle group. This middle group could be easy or it could be hard. It really depends on what your process is for gathering these applications. Oftentimes, they're in this range where they might be big enough to have some support. Maybe they do have an accountant on staff or at least a CPA that they feel comfortable sending things to. But they're small enough that it's really going to be, at the end of the day, the owner filing this. It's likely that the owner has someone that's going to pull the reports out of the payroll processing system for them. The CPA might throw some numbers together for them. But at the end of the day, the owner's going to sit down, they're going to take these individual reports and they're going to put it into the application and submit it to your portal. It's these cases that are particularly hard because there's enough complexity that the calculations aren't straightforward. These businesses, in a lot of cases, were the most impacted. It's kind of the small mom and pop shops that don't have other sources of revenue. They don't have huge amounts of savings. They're working kind of paycheck to paycheck as business owners. So these are the ones that are oftentimes the hardest hit. They're going to have the most complicated calculations they have to do, and they don't have the support in place to be able to handle that. And so what you need to be thinking about is, how do you support these different categories of businesses and loan sizes? Because if you can support them properly, it accomplishes the goals we set out at the beginning of this. Overall, what this all maps to, when I say the amount of effort it's going to require from you as a lender versus loan size, it kind of roughly maps to your profitability on each loan. And so if a really small loan you have a very small fee on, if the owner of that, if the sole proprietor has a lot of questions for you and they eat up a lot of your time, you lose your profitability on that loan. In fact, you might be losing money on each of those loans depending on how many questions you receive. The bigger ones, you get a very good processing fee on that. It'd take a lot of hours worth of time to eat up your full processing fee there. But you kind of cap out at some point because the bigger ones are going to have more audit requirements. So overall, there is kind of this turning point somewhere in here where with the smaller loans, you might be losing money. With the bigger loans, you might be making money. But what matters is the balance you have. If you have a lot of small loans and you think there's going to be a lot of customer service required to service them, to help them fill out this application, and you are in fact losing money. And when I say money, I'm talking about man hours, really. And a lot of these, it's not, there's an extra cost to it. It's oftentimes how much time you have to spend on a phone call with these people, walking them through it. So if you're, in effect, losing some money on each of the smaller ones, you need more of the bigger ones to make up for that. And there's a balance there, but overall, it'd be better if you could keep them all profitable. So what are the problems? Lots of borrower questions. Each borrower, when they submit an application, is going to submit whatever it is they have. So borrower to borrower, that might look different. And you're going to have to review all the different applications and be able to handle all the different kinds of documentation you might receive from different processors, and QuickBooks versus Xero versus just a spreadsheet. And the guidance is always updating. So you're always going to have to be keeping an eye on the updated guidance from the SBA and the Treasury. You're going to have to be communicating that to your borrowers. That's just going to lead to more questions, really, as new rules come out. All of that leads to lots of wasted time. I say wasted, it's not strictly speaking wasted, but you don't need to do it. You can have good customer service without sacrificing a lot of time. And so what we have here, you're going to spend a lot of time hand-holding your borrowers through the application. You're going to spend a lot of time communicating new guidance to your borrowers. You're going to spend a lot of time reviewing overly complicated documentation. These hours that go into that might lead to an okay experience for your borrowers if you're holding their hand through the whole process. But at what cost? So there is an opportunity cost to all of this. These hours could have been spent driving new business. They could have been spent on higher leverage activities for your lending organization. They don't need to be spent on phone and email support. They can be spent on really powerful things that can drive your business forward. So what does a good application process look like? If there's one big thing that you can take away from this that's going to help your borrowers, I would say it's this one slide. We'll send out for anyone that was on our email list and is attended and registered down here. We'll be able to send this out to you, the slides. It's this one slide that I think is kind of important takeaway that will help your borrowers. And
yeah, I think that, Adam, this is really the key to it. The months and months of work that we've gone through, listening to borrowers, talking with lenders, trying to understand, talking with lawyers, and reading everything, it's come down to these 6 things. And if you can master and hit all 6 of these things, then you've got it. But they all have to interrelate. If they don't interrelate and you have one over here and one over here that's not talking to each other, that's the problem. So we're actually going to show you how all of these come together. This is the solution for making this forgiveness process seamless. So now you can come back and if you were dazing off, now's the time to start listening, because this is going to get really interesting. And I think you're going to start seeing the dots connect, because as a lender, we're giving you the borrower's perspective right now. So go ahead, Adam.
So the things you want to do, and this is kind of a checklist of whatever process you end up forming, whatever online portal you end up using, you should really turn to this and make sure that it's accomplishing these things. And they don't all rely, strictly speaking, on a vendor you're going to partner with. A lot of it is process driven, but a good vendor choice can help with this. So what are they? Number one, proactively communicate. The more you can push information out to your borrowers before they have to ask for it, the better. 8 weeks is up for many borrowers now. Have you sent anything out to them about what's coming down the pipeline? Have you told them when they're going to be able to apply, or that there's any progress being made on a portal? What have you communicated? You want to be doing that proactively. So number 2, preemptively provide the answers borrowers need. This sounds straightforward. It can be kind of tricky. An example here could be a independent contractor. They don't have employees. They didn't have employees that factored into their loan amount calculations. They get to use the easy form. That's great. It'd be even great if they knew that they had to go to their Schedule C, take, I believe it's line 14, the net profit, take 2.5/12 of that, and that is their amount that they can request for forgiveness. If they can do all that, great. They might still have a question on a couple of points. So as they're certifying each of the certifications, they're initialing they're signing that they know they're submitting everything accurately. They don't have employees, they can fly through. They get to a question that's going to ask them, can you certify that you did not reduce the hours of your employees? Can you certify that you did not reduce the wage of your employees? Those questions, while technically they don't have employees, so yes, they can certify those things because they technically didn't. It's just one place where you might raise questions. There are a lot of places like this along the application path. It's things to think about ahead of time, and to the extent you can, if you can help answer these questions for your borrowers ahead of time through like creative guides, instructions for them, that'll be really helpful in the long run and save you time from having to answer these questions one-on-one. The next part, quickly update instructions in a centralized location so borrowers always have access to the most up-to-date directions. We all know that the SBA and the Treasury will trickle out new guidance every couple of days, something gets published. Rather than in an email always pushing out the changes of sending something to your borrowers, a list of the changes that came out in a new IFR, it's really better to have a strategy where maybe it's a web page that you have set up on your website. It's kind of the single source of truth. And so anytime there's a change, you'll update some information on that web page, and then you tell your borrowers, always look to that web page for the most up-to-date information as it relates to how we want you to file your application with us. Give them that single place to always go to. That'll make your life easier. It'll make their life easier. They don't dig through multiple emails trying to find that one thing you mentioned before. They go to this page. They always know it's up to date. Similarly, rely on leverage provided by content and not man hours. What I mean by that is, let's say you have 200 different small businesses, sole proprietors, independent contractors, husband-wife teams that are running a business, smaller businesses that might have a similar path through the easy form. If they're going to have a similar set of questions and they're going to call you with that similar set of questions, you don't really want to have that conversation 100, 200 times. What's a lot more effective for you and gives you a lot more leverage on your time is spend 1 hour, write up a description, a set of instructions, something that's going to guide all of those people through that question and provide the answer for them. You create it once, you can distribute it, you can put it on your website, make a YouTube video, anything like that. Create some piece of content that's going to provide leverage. You spend 1 hour making it, but it saves you 100 hours because 100 different people watch it and they would have had that question. So that's just another quick tip. The other thing in 5 and 6 here seemingly are in conflict, but they don't have to be. And so the two points here, one is customize the application path for each borrower. What I mean by that is the independent contractor doesn't need to know all the instructions that 300-person C Corp would need to know to fill out their application. Likewise, an S Corp owner needs slightly different instructions for how to fill out their owner's compensation than a general partner of a law firm. If you can understand the different paths that the borrowers you're working with are going to need to take through their application, you can customize a set of instructions for each of them. And it doesn't have to be per company, but per rough pathway through this application. It's going to make your borrowers have a much better experience trying to fill this out. It's going to reduce the number of questions they have to bug you about. It's going to make them happier. It's going to give you a better, more accurate application to review. Similarly, the more you can guide your borrowers on what kind of information to submit to you, the format you want it in, you give them an empty spreadsheet, you want them to fill it out in a certain way with certain information, the more you can control the information the borrower submits to you, the better your review process can be, the more standardized you can make the process with which you grab and store all that information. So standardizing is good. It helps on a lot of different things, has a lot of downstream effects. And when I said that customizing and standardizing are kind of in conflict, you can see that you can at the same time help each individual borrower understand their path through the application, what calculations they need to perform, while also making sure that the information they submit will look similar to any other company, especially any other company of their size. It'll be their information in it, but you'll always know with what they're submitting where to go to look for certain things. Now, what effect does that have? You can see all of these things here, all these good application processes. If you follow this checklist, it will lead to a graph that looks like this. Instead of a high amount of effort on all these small ones that have questions and are emailing you, calling you about these small questions they have, the amount of effort you have to put in is greatly reduced. And the amount of effort for these medium-sized ones, it stays pretty flat because you're using good strategies, good process strategies, good content strategies to give them what they need so they don't have to bug you and waste man hours that you could be putting elsewhere to get the answers that you're providing. I left this as a dashed line. To be fair, I don't fully know where this is going to go. It depends on what that audit looks like and the extent to which a lender needs to be the middleman for an SBA to borrow or audit. And we just expect more of those to happen with the bigger companies, especially those over 2 million. So I don't know exactly where for the bigger borrowers, the effort amount will go, but it will go up. It's always going to go up because there's more to review, more documentation, but it's a lot lower than it could have been had you not had a good process. What does this do to your profitability? If you don't have these small borrowers with the very small processing fees asking you tons of questions because you've given them what they need ahead of time, yes, you had to invest an hour or two into giving them the content they need. And you have to do different content for each kind of bracket of borrower. But you save a lot of time, and that increases your overall profitability per loan. You keep more of the processing fee because you didn't have to spend it in man hours. Or another way of looking at it is you saved a lot of opportunity cost. The hours that would have gone into answering the phone can be spent on other things that drive the business forward. In addition to the increased profitability, you also generate happier customers, and that's another way to drive some good business to your bank. Especially as a lot of other borrowers are going through this process at their banks, they're getting frustrated with the process that they have. If they hear that your bank has a really seamless process, that's going to help your reputation in the small business community. I would bet it's going to drive new business. There's a lot of statistics out there saying that in this year, people are actually open to shifting banks, especially as they got hung up with their lenders during the PPP loan application process. They were frustrated then. They're open to switching banks. They're going to close out their PPP loan wherever they are. And if someone else had a much better process and their customers are a lot happier, you might be able to drive some new business your way that way. So overall, that's what we wanted to walk through on the borrower side of things. I want to pause quickly, take a quick break, see if there's any questions related to just the borrower side and what a good process looks like, why that's helpful for you. Overall, at the end of this, we're going to get into a little bit of how we've solved it. We're going to show you some of what we've done. We just want to make sure you walked away with some value outside of, us trying to pitch ourselves to you. So I'm going to pause, see if there's any questions. If there's not, that's great, but I'll just go ahead and pause and see if anything comes in. You can use the Q&A button.
Yeah, there were a couple questions that came in. Some folks have already realized that there are some gaps in the guidance from the SBA, and one of the questions was, can you tell the borrowers, as a lender right now, can you officially tell the borrowers that they can file for forgiveness before the entire 24-week covered period? And it's a big question because the lenders are the ones that are talking for the SBA because they're supposed to be SBA lenders. But there are certain aspects in the IFR, and these have been in the documentation from the beginning. You absolutely can file for forgiveness. There are a couple of aspects, however, that I'm not going to go into. You have to account for if you have any of the 25% folks. You have to calculate them over the 24 weeks. If you file in 12 weeks, you have to make sure that the entire 24 weeks of that employee that you reduced more than 25% is accounted for in the reduction. That's one of them. The second one is how you calculate your FTEs, because now your safe harbor is kind of a little bit confusing in that regard if you don't go the entire 24 weeks. So you have to calculate your FTEs. What is the FTE calculation going to be if you file, say, in the 16th week? What if you file in the middle of the 16th week? Well, most people are going to take at least a week to put these things together, these forgiveness applications, unless they're working with somebody that's been really getting it set up. So when you file your application is when the SBA guidance says you're supposed to look at the FTEs on that day, the day that you file the application. Well, do you take half the pay period or do you take all the pay period? The questions hopefully will come out. But the key that Adam was saying is if you have a centralized place that all your borrowers know to go, guess who they're not going to call and guess who they're not going to email? They're going to go to your centralized area. And that is what we're trying to work through. We've gone through this process with the borrowers in our mind and in reality. We've submitted applications through our system, and lenders have literally said, wait a minute. So they're our borrower. You've worked with them to get their forgiveness application done. They finished their 8 weeks, and they have these questions that we can't answer yet. Well, right. That's correct. So when you can answer it, you need to tell that borrower that asked you. Well, what about the other 220 borrowers that have the same question? So yes, you can tell your borrowers that you can file before the 24 weeks. but there better be a good process and a system as to what they need to do when they do that. And then the FAQs and the instructional videos as to the nature of all of the aspects they're going to have to gather, what they're going to have to bring together. And then what I call this, the dysfunctional triangulation of the borrower, the CPA, and the lender. Because that's really what's going to happen is the borrower, if they have a CPA, is going to say, hey, CPA, we need to get this going. CPA will undoubtedly have questions. If they have a centralized place, they can get it answered. If not, they call you. And when they call you, because you're supposed to be the SBA, you say, well, you know, the guidance should be pretty clear. And depending on how many loan officers or senior loan officers or processors you have, how are you going to ensure that the question is going to be answered in the exact same consistent way? And so that's what we're doing with you, the lenders. And by the way, this is just the start of our series of lender webinars. Weekly, we're going to continue to just gather the information and get the collective whole of what the lenders are seeing as the solution. We're going to be bringing solutions that we've researched, and we're also going to be listening to you on your solutions. So the 24-week process is going to have a lot of those intricacies that we're going to go into. And there were a couple other questions, but I think we're going to answer those after Adam goes through the system as to how we can do both, standardize this process, but also customize it for each borrower. So, yeah, I think that's it. Go ahead, Adam, and I'll cut in if it gets to that point.
Perfect. So I just want to walk through the other side of it. What does a good lender, application review process look like, and how should lenders be reviewing these applications? Again, it's something that might seem straightforward. The SBA has given some guidance saying you have to do this, 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 and this. But the way in which you execute upon those requirements, the things that you are responsible to do, can drastically improve or reduce the efficiency of your process. So some of the obstacles to a good application review process, it really starts with the applications you're receiving. And so having a good application process itself and a good way to coach your borrowers through filing the applications is really the best starting point. But once you've got that down, now we can start looking at this. So each non-standard application you receive will take longer to review. What I mean by that is similar to what I said before, you want to try and get your borrowers to the extent possible to submit similar types of documentation. And I don't necessarily mean, submit similar invoices and things, but more, FTE calculations. If they're on the same template spreadsheet each time, that'll make your life a lot easier. If they're submitting information to you in a spreadsheet format that you can standardize, that helps you a lot and makes your review process easier. Every time you get a new kind of application, new kind of substantiating documentation that you haven't seen before, it'll just take you longer to do that review. There's also a lot of lender compliance issues and responsibilities. So making sure that you always know how to go about, how to fulfill your responsibilities in reviewing this is going to be important. And then the last one is, and we've seen this, unfortunately, that some reviewers will just, within an organization, and maybe it's senior loan officers across an organization, they're going to be doing the reviews, or even a more centralized group of reviewers that were set up to just review these forgiveness applications. But, some reviewers might have different workflows for the review. What that leads to is different outcomes. That is a bad thing to have happen. You don't want different outcomes based on who's reviewing it. So these are some of the obstacles to a bad review process, is in a lot of ways lack of standardization across these things. So what does a good process look like, and what are the outcomes of a good process? Well, similar to the application process itself, one of the best things you can do in all this, and one of the big drivers, is you want your customers to be happy. You are you're a lender. You want your small business customers to be happy with you, to be spreading the word about how great of customer service you had, how easy it was to work with you. Well, all the other banks out there are, they have a bad process. Their borrowers might be frustrated. You want to be in your community one of the best banks when it comes to applying for PPP loan forgiveness. So you want your borrowers to be happy. That's one of the big driving goals. Other goals that really funnel into that one. You want standardization across the entire lending organization. So if you're a bank, you want all your reviewers doing things in a similar way. You want the process to be the same no matter who's doing it. So it should be a very repeatable process. All reviewers should reach the same result because they're following the same process to review. You don't want to have one lender or one reviewer, one loan officer look at a loan application and think it looks good, and then another one look at it and see problems the first one didn't see. You want everyone to be able to work through a certain process and achieve the same outcome as a result of that process. This will also, if you have a defined process there, it'll result in a quick and efficient review. You don't spend a lot of extra time doing things that aren't strictly speaking necessary. You're accomplishing what you need to. You're staying true to the goals of what you're supposed to be doing and fulfilling your responsibilities. And the other benefit is that this makes it more predictable. When you receive a loan and you kind of know the loan size, you'll have an idea of how long it's going to take you to review it, and you can communicate that back to the customer. From working with a lot of borrowers, we know that some of them want this loan off their books soon. It's been great having it. It's been great having that subsidization of their payroll costs, but they kind of want to have this behind them. The last thing they want is to go through the effort of filing their forgiveness application and then waiting 60 days without hearing a lot from you in order for you to review it, and then it going off to the SBA and waiting another 90 days. They want to have this wrapped up. So to the extent that you can make it efficient, but at a minimum, communicate how long you think it's going to take you to review. It'll make your borrowers happy. And that's kind of the ultimate goal here is you want to have a good review process. You want it to be, compliant, repeatable, but you want to make sure your borrowers stay happy. Now, a couple of solutions we've heard from people. We don't like these. We're pushing people away from these whenever we hear them, but having guidelines that kind of come from the top down. So somebody within a bank will create guidelines of what everyone should be doing, but it's not process driven. It's more rule driven. It's trying to educate, here's the SBA rules of what you should be doing. Go and do it. Here's the rules to look out for. That's good. That's part of it. But what's really missing is the process. You want it to be a repeatable process so that each review will be standardized. Each review will follow a same pattern. Each review will reach the same place for the same application. So that's what's missing on that first one. The next part is we highly don't recommend this, especially if your bank is slightly larger. Some of the banks that we've been talking to, they're a lot smaller. They might get away with this, but for each of the banks, it was really a personal relationship that drove the PPP loan application. It's the loan officer working directly with that business. They only did a couple of businesses. And so it's kind of just up to the loan officer to understand the regulations that they need to accomplish, the responsibilities, what they need to do, and make sure they're checking it. This might work if you have, over the course of a couple of months, only a handful of applications to review. Once you start getting too many, it becomes very burdensome to try and kind of let everyone do their thing and review it as they see fit for each of their relationships. The other one that we've seen, we haven't actually seen this one. We saw it as a part of the loan application process. It was very common there. It's possible it's going to be the case here. We don't recommend it. The idea would be a panel would try and review each of these applications. The information would be compiled. It would be looked at across an entire panel of people and decided upon by a panel. That just slows everything down. It's unnecessarily burdensome. It wastes a lot of time on the loan officers. It's not worth it. If you have a good process and people understand the rules and what they need to do at each step of the process in the review, you don't need to do it as a panel. It's just all about having that good process in place. So what does a good process look like? We've touched on it already, but it starts with the standardized application. So the information you get is in a fairly standardized format. That makes it easy for you to review. The standardized file structure, all of that, it feeds in so you can efficiently and quickly do these reviews. And more importantly, you always know where to look for things when you need information. If you need to check the documentation for payroll costs, you know exactly where to go because it's a very standard application type you're receiving. That helps you make sure you're really following through on all your responsibilities. The other big part is having standard workflows that every reviewer follows. I use the term workflow. Workflows, it's really a process, but it's driven, especially if you have some kind of platform you're going to be using that'll walk you through and host these for you to review. You should want it to have a workflow built in that allows you to do each step of the review. So for each thing you need to check as a part of your lender responsibility, there should be a workflow tied to that that helps you get through that responsibility quickly, easily, and accurately. And so what do you actually need these workflows to be? This is tied directly back to what's in all of the guidance of what the lender responsibilities are. One, you need to confirm receipt of borrower certifications. This is pretty straightforward. Actually, in our system, it ties in nicely because they can't even submit it if they haven't certified the certifications. Two, they need to confirm receipt of documentation that must be submitted to verify payroll and non-payroll costs. So you, the lender, need to make sure that they are taking a look and they've submitted all the documentation that's required. If they haven't, you can't accept their application. They need to have submitted all the proper documentation. It's another thing our system does pretty well. They group their documentation together in specific ways so that it's easy to review. They know that they're submitting everything they need to submit. It's easy for you to take a look at because it's grouped according to what it is. So it's just a simple checklist of, is this file here? Let me just open it up, preview it. Looks good. On we go. Third, confirm the borrower's calculations on Form 3508 or 3508EZ by reviewing submitted documentation. This is where it starts to get a little tricky. There's different ways to interpret what's actually required here by the lender. But at a minimum, you will need to look at the documentation and make sure that you can justify the numbers that are on the application itself from the documentation they've provided, that the payroll cost isn't significantly higher than their third-party payroll reports would otherwise indicate. So you need to check those things. This, I think, is going to be the most burdensome part of this application, that you yourself need to go in. You need to review some of these calculations. You need to make sure that the numbers are reasonable. You need to make sure that everything is adding up across this form, that line 1, 2, 3, 4, and 5 add up to line 6 on the easy form, things like that. You need to make sure those things are flowing properly. Number 4, pretty straightforward. You just need to make sure that they accounted for their 60% cap and payroll costs appropriately on both of the easy form and the standard form. That is line 1 divided by 0.6. The nice thing with our system, which I'll show you in a minute, is just that all of this is, for the most part, taken care of pretty automatically. All of the certifications have to be submitted in order for them to actually submit the application. This number is generated by us, so you know it's right. We collect all the other calculations and things in such a way that it's easy to review. Any calculations that are actually done by the borrower are actually done by our system, so you know they're going to be right. There's no, back of the napkin calculations they did and are submitting. It's all done for the calculation standpoint in our system, so you know they'll be accurate. What are the results of this good review process? You know that your reviews are always going to be fair and standardized. That's important. It's just really important that for each of the borrowers, they're not going to be, artificially penalized because their, relationship manager is the person that is going to scrutinize this a lot more. If that is the case, it kind of begs the question, why within a lending organization is one person not doing full reviews and one person is? But having a standardized process means everyone is being treated fairly and equitably. 2, reviewers can always find what they're looking for. So you, the reviewer, always know what to look for. You always know where to find it. It makes it easy for you, and it makes it easy for you to make sure that the application submitted is accurate and supplies everything that's needed. The reviews can, with all those things, be performed quickly. All of that feeds into the ultimate goal of, you want happy customers. And if the loan officers or whoever is reviewing this is happy too, that's an extra bonus. But it's happy customers that really drives a successful organization. And so if your small business owners can be happy with just the entire process working with your bank to get their money forgiven, to essentially turn this loan into a grant, which is great for these small businesses. If this process is easy, it's great. If it's frustrating, they'll put up with it maybe. But if it's great, they're going to talk about you to their small business community. And I think they'll drive business your way because of it. So what do we do on our end that actually helps bring these things together? We solve both sides of these problems. So for both the checklists I talked about of what should the requirements be for each side of this, we do both of those. We help the borrowers fill out their application, and we help the lender perform their reviews. And we do it in one fully integrated platform. So it feeds into each other really nicely. If you don't have both of these set up, there's a lot of frustration points for the borrower and the lender. You really need a platform that can do both of these things. If it's, if you have an online portal and it goes somewhere else and you have a good review process and you just need to augment the portal, that's okay. But you need to make sure you have both of these. Otherwise, it's going to be frustrating regardless for your borrowers. So make sure that both of these sides exist. We do it in our system. What does that look like? This is from last week when the new applications came out. We dynamically and very quickly pushed out an update to our system that gathers the applications to account for the fact that there's now 2 applications. Our application is fully dynamic, and so we're able to handle when borrowers come to our system. every borrower is going to have a different path through our application generator based on what answers they give us. If they're a C Corp, they're going to see something. If they're an independent contractor with no employees, they'll see something else. They'll only see what they need so they're not overwhelmed with extra information. We're trying to keep it simple for them, trying to help them do this quickly and accurately. So the really important part here is that it's dynamic. Every borrower gets a customized version of the application that fits exactly what they need and what they need to know in order to file their forgiveness application.
So for instance, Adam, do you include retirement costs provided by the organization for the benefit of the employee in a C Corp, in an S Corp, in a partnership, or self-employed? Do you include the health insurance contributions for the benefit of the employee by the employer in self-employment? No. In a sub S? No. In a C Corp? Yes. So all of those aspects are a phone call. I've counted about 6 to 7 phone calls that they're going to run into that your system answers with one click of a button. What tax return do you file? And then boom, all the FAQs are right there, whether you're to include retirement income, whether you're to include the health insurance, what are you eligible for? Is it 2.5 times a certain amount? Is it 850 seconds? Well, whether you're doing the 8 or the 24 week is going to depend on that. What if you do 16 weeks? What if you have the interim that you're going to file? We still have the maximum amount. However, can you take the maximum amount? Those are all questions that will be answered as we evolve. Within a couple days, we will update our system as soon as the SBA comes out with their guidance. But do not, please do not make the assumption that these folks are going to figure it out themselves or push it to their CPA. It just isn't going to happen. They're going to need clarification on all of those items. The easy form is great, but there's one line for cash compensation. And you have, depending on what kind of self-employed borrower you are, you have to understand which one you can get. We have all the tax returns detailed out. And I've circled all of the lines, the 31 for the Schedule C, the 14 and the 12, and then the 1120S. There is no self-employment that you get to take. So you're either a W-2 employee as a self-employed owner employee, or you get nothing. And it's just that's an angry borrower now. So anyway, I just wanted to point that out, Adam, because on the owner compensation page, we have an entire module for that. And if you want to look at how many borrowers are in that level, we can show you how many borrowers are in that self-employed level. It's 1/3 to 45% of the entire portfolio of a lender. It really is daunting. So anyway, I wanted to make sure that point got out because there's several questions that have come in on that, and I just don't have time to answer all of them right now. We will in the future webinars, but that's where people need to focus. So Adam, how does our system, back to that page of what you were doing, once they select the tax return, how does that system then get to a 3508 or a 3508EZ? How does it know which one to do?
Yeah, so I'll hop back there. I also just want to point out while we're on this page, just, general partners, as of course matter, people might treat them similar to some of these other categories, but even for them, the owner's compensation that you would have to walk them through is what is their 2019 net earnings from self-employment, not business income, their self-employment income earnings on their tax return, minus Section 179 expenses, times 0.9235, and then on top of that, you apply this calculation here. It's pretty complicated. The point is we're doing it dynamically, and so they answer a couple of simple questions, and we can serve up the right answers for them. And so going back to this page, we ask, what kind of entity are you? What tax form does the owner file? Because that's what it comes down to, so we can help guide them. If you're an independent contractor, do you have payroll or do you not have payroll? Do you have employees or just owner payroll? We ask all these questions. We can dynamically serve up the information and the instructions that are most relevant to every single borrower that is applying. That's when I spoke earlier about having customized application paths for everyone. That's kind of what I mean, that if you give the independent contractor with no employees too much information, you're going to overwhelm them. If you give the C corporation with 100 employees too little information, yes, they can go and get it themselves. They'd rather you give it to them, though. So there's a middle ground, and that middle ground is you kind of customize it for each one of them, and that's what we've done here. The other thing is we have a large borrower knowledge library. We have a lot of text instruction that gets dynamically served. We have a lot of walkthrough videos that will walk people through every facet of this application. This is just a screenshot of the first page we have on some of the YouTube videos. A lot of these are not actually listed for you to find. You would only see them in our application because it so relates to the application that they're filing through us. But you can just see there's a lot of videos here. There's literally hours worth of content in here. We put it together to make it easy for borrowers to know what they need to know to file. Then we're going to move on to the lender dashboard. So the lenders, once they get these applications, assuming they used a good review process, used our review process, or sorry, application submission process, all of the loans and borrowers will compile into a single dashboard where you can review all the companies at a glance, see some of the key figures you need to know. You can dive in for each company, see what you need to know about their loan, about their application for forgiveness. But ultimately, it ties back to these workflows I talked about. And so there's 4 things you are required to check. These are the 4 of them. And so we build workflows around the things you need to do so you can, in a repeatable way, review each of these applications. You can review the documents. You can see a list of all the documentation that's available, all of the figures that are in the application itself. You can see the calculations put together. In this case, you see an FTE calculation, hours worked. So we make it easy for you to review what you need to review quickly and efficiently. And it's tied back to those workflows, those processes. So you do it in a repeatable way so everyone's doing it in the same way. Now, if you're interested in working with us, again, like the whole reason we had this webinar, we just want to make this an easier process for all the borrowers out there. We think we have a good solution. We would love to work with you. Hopefully, even outside of that, you took something away from this. But our solution, we have 3 different branching options, and we're happy to do some customized stuff. If you don't quite see something that works for you in here and you want to discuss with us, we're totally open to that. Reach out. But the 3 popular options, there's a fully integrated platform. You get the whole borrower portal, the whole borrower toolkit. All your borrowers can use this to submit their application, and all the information gets collected in a dashboard where you get to review it on the lender side. It's that workflow-based dashboard that helps you walk through it quickly. If you already have a portal set up, we know there's a lot of companies out there that, a lot of banks that are already in the process of getting a portal set up that just ask, what's on line 1, what's on line 2, or even it has some instructions, but you don't think it's quite going to do it for you. Or at some point, maybe you start accepting applications and you see the questions coming and you realize that what you had for your portal is not quite going to do it. We have just the borrower solution side of things. So if you just want to use that, you can pay, it's per loan, you pay us, and essentially all your borrowers can work their way through our system. We can, depending on what works for you, and this is where we can work with you, how do you want to collect that information? Would you rather they still just go back to your system and plug it in your portal? But by using our system, they know all the right answers to the questions? Or do you want us to collect all that information? You don't need the whole vendor dashboard. You just want kind of a quick file upload or something. We can work with you on that. The third option is what we call the preferred lender option. It's if you think you have almost like an insurance policy a little bit. You think you have a good system, you're not sure. What you want to do is you pay a small fee per loan. It's less than either of these 2 options, but it's a smaller fee. You pay that fee upfront, and then it gives all of your borrowers a subsidized access to the borrower side of the platform, to our whole borrower toolkit, to the borrower knowledge library, all this information that helps them feel confident that they're filing their application properly. In this case, for some borrowers, the independent contractors, no employees, because you've subsidized it for them, there's not going to be any charge. For some of as the loan size ramps up, they might have a small charge, but at any point, if you're a preferred lender, what they will see is that if your bank was not a preferred lender, they would be paying this amount. Maybe it's $6.99 based on their loan size, but because they're a client of yours and you're a preferred lender, they get to use all of this for $99. Just as an example, it is just another way where you kind of look like the good guy to them. You give them this extra source of extra information. We walk them through all this. We help answer all the questions they might have. We guide them through their whole application. and you benefit on multiple levels from that. I think the important thing with all of these, though, is that the perception that the borrower has really equates to the reality of the situation. You can put a lot of effort into having a good portal for them to go through. It collects all the information in a great way. But if the borrower doesn't have all the answers they need, if they still feel unsure about it, if they kind of perceive that they don't know something, even if they do, even if we do, even if you do, if they feel like they don't know something, that's their reality. They're still confused. They feel like they don't know. They're still going to pick up the phone and call you. So it's important that you help them feel confident in what they're submitting to you. They just want security. They want to avoid that feeling of complexity, confusion, and fear. They want to feel secure that they're submitting a good application, that everything is there, that they've done a good job and filled it out accurately. And they want to get it off to you so they can get their answer soon. That's what we've tried to build. We've tried to build something that accomplishes that makes it easy for the borrowers to submit their applications, to feel confident in what they're submitting, to know that they did it right, and makes it easy for the lenders to review quickly. So this whole process can wrap up quickly for those borrowers that are done with their period and kind of just ready to move on from the Paycheck Protection Program and not have to keep worrying about updated SBA guidance, things like that. So we built this really with the borrowers in mind. We've spent now a couple of months working with borrowers and also for the lenders, because ultimately lenders doing a great job with this ties back to happy borrowers, and we're here to help all of them out. That's what we wanted to walk through. Wanted to pause. We'll take some time, go through any questions. If you have any questions, toss them out. There's this Q&A section, the button in Zoom. You can push that button. We'll see those questions. We'll go through them. We can offer any other quick tips you want. You can ask us about our platform, anything we discussed about the processes, or even just our interpretations of any of the current rules out there. We're happy to field any types of questions you might have. With that being said, I'll let Chris kind of MC that process and the questions, and I have not been paying attention to the Q&A while I've been presenting, so I'll hand it all back over to Chris, and he can start going through that if there are questions.
Yeah, there's a series of them. I'm answering some of them in a written format that you can see, but this isn't, we're almost at an hour here, and it was very important for us to be able to get everything out, which are those 6 things in the process. Whatever solution we're going to bring to you as a lender, we're not going to bring it to you if we see a gap. We're going to recommend to you that gap gets filled. If you want to fill it with another tech company or do some other format, that's fine. But we're at least going to recognize that we see a gap, because that's what we're focusing on, is this workflow. So the one question, which would solve a lot of this, is the SBA going to have a separate application for just borrowers with no employees? And I think that is a sticking point, again, because if they have no employees, it's really hard to fill out the EZ form, because you have to check all these boxes, like Adam was saying. I have not reduced my employees. Well, they don't have employees. And so it's almost more confusing. Just let them have their loan. Let them have their $20,000 and move on. But I don't think the SBA and the government's going to do that. But they could have a separate application. There has been talk of that they just have one form and they don't have to go through all of that. But they really want their certifications. And I think that's what's really going on. So the other questions are surrounding our program, our system. And I think what we'll do is we'll get back to each of you individually. For instance, how does your program answer questions back and forth? If the borrower has a question, are you guys going to answer it? Or how is that going to get answered if it isn't in the FAQs? All of those aspects are answered in the program that we have. But what we've designed, and all of those videos that Adam showed you, they're already answering the questions we've anticipated the borrowers are going to ask. So if there's an outlier that has a very unique situation, I talked to a borrower the other day, we'll try and process through it, sure. But we don't need to, because the majority of all the work has already been done with the videos and answering the questions, because we've already gone through this. We go through this hundreds of times to anticipate what that looks like. So you have our information. You have my email address from the invite. We're going to be doing these webinars every week. So as you're processing through and thinking and talking with your folks who are making these decisions, you're looking at whether you're going to get a digital portal or not, or how many people you're going to have to process. I'm going to send this to you. Everybody that showed up, or at least told me that they wanted the recording of it, I'm going to send you the PowerPoint presentation so that you can process through that. And we're happy to look at that on an individual basis with your bank. And really, I just need to know how many loans you've got, and I can pretty much break down what that looks like unless you have a unique situation, and we can help you with that workflow. So we look forward to seeing you out there, as we call it, on the battlefield. But let us get down on the ground with you on what your borrowers are going to be really facing week after week, and let's see if we can't solve this problem for you and keep that customer service going in a positive direction. I think we've brought some business to some banks because the larger banks fumbled the ball. Don't fumble the ball now that you've got it. Make sure that this forgiveness process is seamless and painless for your customers, and you get to keep those new customers that you've got. So anyway, thanks for joining. I haven't seen anything else pop up from the question perspective, so I'll let everybody go. I know it's late for some of you on the East Coast, and you folks on the West Coast, you still have some sunshine ahead of you. So have a great weekend, and we look forward to hearing from you. And if obviously you have any specific questions, you can email myself, Adam, Cal's on our team, and we're here to help. So anyway, appreciate it, and thank you for participating. We really appreciate the time that you took today.